Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Wednesday, and this is your New York Open Prep. Two things stand out. U.S. services activity is holding up, even as private hiring cools, and Europe looks set for a steady hand from the central bank, while global tech digests a fresh wave of AI disruption. In the U.S., the services gauge from the Institute for Supply Management came in a touch stronger than expected, with the broader read still signaling expansion. That echoes Monday's sharp jump in manufacturing, and has kept the spotlight on a rotation into old economy names. But the private payrolls look softer, with the ADP report showing a modest gain and a weak mix, including losses in white-collar categories, even as wage growth stays fairly steady. For traders, that matters. Across the Atlantic, Euro area inflation has eased to around the high ones on the headline, with core prices a bit above 2, and banks expect the European Central Bank to stand still. The euro is already softer into that decision, with recent services and inflation data largely in line, and giving policymakers little reason to move. In the UK, services activity picked up, but firms kept trimming headcount, leaning into automation rather than hiring. Tech remains the stress point. Software names are under pressure on worries that new AI agents could upend business models, a theme strategists say arrived earlier than many expected. Anthropic, meanwhile, says it won't run ads inside its chatbot, underscoring how unsettled monetization still is. Deal-making is a counterweight, from a record print for London blue chips off a big insurance takeover to Glencore's sale of a mining stake to a U.S.-backed buyer, which brings cash and may reduce operational risk. Geopolitically, talks between Ukraine and Russia have resumed in Abu Dhabi with U.S. participation, even as spikes continue, a fragile backdrop that markets will monitor. And in energy, Russia's Urals crude is being offered to India at a wider discount to Brent, testing refiners' appetite given U.S. trade commitments. That leans mildly bearish for benchmarks at the margin. Turning to markets and sectors, resilient services are supportive for cyclicals, while the softer jobs print tempers the path for rates, leaving the dollar mixed. The euro is on the back foot ahead of the central bank, and dollar-franc sits range-bound as the Swiss National Bank stays attentive. Tech-heavy indices could remain choppy as AI uncertainty lingers, while any progress in diplomacy and cheaper Russian barrels would weigh slightly on oil. Looking ahead, the calendar is centered on the European Central Bank decision and the official U.S. jobs report on Friday. U.S. housing is a soft spot near-term, with mortgage demand hit by winter storms. What you should be watching today: the euro against the U.S. dollar, with a bias to drift lower into a steady European Central Bank. Dollar-franc, likely range-bound unless U.S. data surprise. Brent crude, with a slight downward tilt if discounted Russian supply and cautious diplomacy persist. And the Australian dollar versus the U.S. dollar, where risk sentiment from the software sell-off and firm U.S. services could keep the Aussie subdued. Bottom line, markets are balancing resilient activity with softer hiring and an AI reset, while central banks stay patient, optimistic, but cautious. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.